Because health savings accounts are tax-advantaged accounts, the IRS requires that you maintain records of your eligibility and contributions to your HSA, as well as all distributions from your HSA. Once you begin using your CDH plan, you'll find that if you take a few simple steps to track your healthcare spending, managing your health savings account will be very easy. One of the first steps is to designate a place to keep all of your medical records, including bills, explanation of benefits, or EOBs, paid receipts for doctor's visits and prescriptions, and your health savings account bank statement. You can create a folder in your filing system, use a shoebox, or any other system you choose. The point is to keep everything in one place so that you can quickly and easily find what you need. Another step is to staple or paperclip together a bill, EOB, and paid receipt for the same service. This way, you can track the total charges, how much the insurance provider paid, and how much you paid. It may be helpful to note on your receipt if you paid for the expense with your HSA funds or another method. And remember, you can use your HSA funds to pay for eligible healthcare expenses for your spouse or children, whether they're covered under your insurance plan or not. If you pay for any of these expenses with your HSA, keep those records in the same place as well. You may want to separate the bills that you paid with your HSA funds from bills that you paid directly from your personal funds. Remember, you can reimburse yourself for eligible expenses anytime, so you will want to keep a record of those expenses as well. A final step is to reconcile your expenses each month with your HSA bank statement. This step helps you perform what's called reconciliation. That just means that you match up bills and paid receipts with the withdrawals shown on your HSA statement. If you pay for eligible healthcare expenses from your personal funds, you may decide to reimburse yourself from your HSA at a later time. This practice is often referred to as the shoebox rule. With the shoebox rule, you can pay for eligible healthcare expenses from your personal funds and hold the receipts until you're ready to reimburse yourself. This allows your HSA funds to continue to grow tax-free. There is no limit on when you can reimburse yourself, so long as the expenses were incurred after you opened your HSA account. So, you may wish to pay all of your eligible healthcare expenses from personal funds and use your HSA as a long-term savings account. The important thing is to save all receipts and bills so that when you do reimburse yourself, you have the appropriate information for your tax records. Remember, you'll want to attach those corresponding bills and receipts to the HSA bank statement that matches the withdrawal. Each year, you will need to file IRS Tax Form 8889 with your personal taxes. This is a short form that requests information about how much you or others contributed to your health savings account, how much you withdrew from your HSA, and what amount of those withdrawals paid for eligible healthcare expenses. By keeping your healthcare records together and organized, you should have everything you need to easily complete this form. Managing your healthcare spending and health savings account is easy with just a few simple steps. Remember, designate one place to keep all of your healthcare records, including bills, EOBs, payment receipts, and HSA bank statements. Keep all records for the same service together. Periodically match your records and receipts to withdrawals from your HSA. When you keep track of your healthcare expenses, you'll be better informed about the true cost of you and your family's healthcare needs.